I'm very pleased to welcome you all to join today's training session. What makes a green bank? Co-hosted by the Alliance and HSBC. In this session, we aim to share practical insights into key approaches of financial institutions' decarbonisation plan. Our industry experts from HSBC and GFANGs will share the latest insights about reduction of finance emissions by financial institutions and different aspects of net zero transition. They will also share their own climate journey and net zero transition plan as practical examples. Please join me to welcome our speakers from HSBC and GFANG, Mr. Peter Canning, Global Head of Sustainable Finance Strategy and Implementation at HSBC, and Mr. Alex Mitchie, Head of GFANGs and his team. Participants are welcome to post questions for the Q&A. To kick off this session, may I pass the stage to Peter and Alex? Thank you.
Thank you, Susanna. Really pleased to have a chance to share our experience as HSBC and join this conversation together with the colleagues from GFANS. Thank you.
Thank you very much. My name is Alex Mitchie, as you heard. So I run the Glasgow Financial Alliance for Net Zero and have a history throughout my career in mainly central banking, but also working in the Treasury and the World Bank, and delighted to hand over to my esteemed colleague, Yuki.
Hello, everyone. My name is Yuki Yasui, and I'm the director of the newly launched GFANS Asia Pacific Network, which will be based in Singapore.
Should we do a quick run through the agenda we have planned for our time together? Wanted to give Alex a chance to introduce GFANS for those who may not be familiar with GFANS, its structure and the work that it's doing. I think important timing, considering yesterday GFANS published a number of reports and publications for the public, updating on its work to date and the various work streams, which we'll touch on a bit later. I'll then spend some time talking specifically about what we're doing at HSBC in implementing our net zero commitments, and with a particular bit more focus on finance emissions, measuring finance emissions and setting targets. And I'll also talk about one of the key documents that was released by GFANS yesterday, which is a draft report setting out recommendations, guidelines for financial institutions to develop their own net zero transition plans. It's the work stream of GFANS I've been closely involved in, and so really excited to have a chance to share some of that with you today. And then also wanted to give Yuki a chance to talk more about the Apac network that GFANS launched just over a week ago, so really timely as well. So that's the agenda we have set up today, and we'll allow a little bit of time at the end as well for Q&A. Alex, can I hand over to you to kick off? Thank you.
Absolutely. Thanks so much, Peter, for that great introduction. So I thought it'd be helpful to give a little bit of background and context about why we exist, why really we're here today. And that's obviously because if we don't succeed as a global community of limiting global heating to 1.5 degrees, we face catastrophic and irreversible climate change. And I would like to put some emphasis on the word irreversible. 1.5 was a goal of the Paris Agreement, but since then the science has unfortunately become clearer and more emphatic that a lot of the tipping points that make that irreversibility a feature happen shortly after 1.5 and before 2 degrees. So the melting of the permafrost in Siberia, for example, which will release huge amounts of methane, or the melting of the polar caps, which provide reflective capacity to the sunlight. So that's why every single government in the world reaffirmed their commitment to limiting global heating to 1.5 and pursuing all efforts we can to achieve that in the Glasgow Pact last year. And obviously the 1.5 is related to the carbon budget or the greenhouse gas budget that we have. So the IPCC, which is the scientific group under all global governments of the COP, the Conference of Parties of the UN, has made clear that in order to limit global heating to 1.5, we need to hit a net zero global economy around 2050. And furthermore, because it's a carbon budget, it's not about when you hit net zero, it's actually about when you start decarbonizing, and we need to roughly decarbonize about 50% by the end of the decade, by 2030. And just on that final point there, you know, my boss Mark Carney often says that what we need is a transformation of the scale of the industrial revolution at the speed of the digital transformation that we've seen over the last 10 years. And this is going to create a huge amount of economic opportunities if we achieve it. And I'm very hopeful that we will. We need over 100 trillion of investments in a new economy. And most economic modeling, including from the IMF and various other bodies, shows that achieving net zero in a coordinated way will be pro-growth and pro-profit as well. So there's a moral imperative, there's a social imperative, and there's a business imperative to do that. So if we go to the next slide, you will see that is why over the last 2 years ahead of the COP in Glasgow, you saw countries, states with net zero commitments increased hugely because of this new body of evidence of why we need to achieve net zero and how we get there. You know, emissions covered by net zero commitments went from 30% at the start of 2020 to over 90% of global emissions covered by COP last year. And one of the big innovations of the COP that we've just had, we're now at the halfway point between Glasgow and Sharm el Sheikh in Egypt, which is the next COP 27. But one of the big innovations was a new sense and a new reality that in order to achieve our climate goals, we need a whole of society, whole of economy approach. It's not just governments, it's not just states, sub-state actors like the private sector, real economy corporates, financial sector, regions, cities, all need to work together to decarbonize their economies and create that just transition. So that's why you saw also a huge increase in the number of companies with net zero commitments, as well as financial commitments. And that financial commitment there, that 26-fold increase, was partly generated by the Glasgow Financial Alliance for Net Zero, which was chaired by Mark Carney and now Mike Bloomberg. So I'll just spend a little bit now just introducing GFANZ in that context and how it works. So if we go to the next slide, please. So Mark Carney was the UN Special Envoy for Climate Finance and the Prime Minister's advisor for COP26 for finance. And given all of that context I just provided, the UNFCCC, the Climate Committee of the UN, have a campaign and a standard called the Race to Zero about what it means to make a credible net zero commitment. And importantly, a net zero commitment for a financial institution must cover their financed emissions, must cover the core way that a business makes money. So, you know, for real economy, that's often scope 1 and 2, so the emissions that they produce when they're doing business. But for service companies and financial service companies, it's actually, you know, if you're a bank, it's the loans you make, it's the underwriting you do. So last year there wasn't actually a vehicle in this UN Race to Zero for every part of the financial system to make those commitments, and there wasn't a forum for all parts of the global financial system, whether they're an asset owner, asset manager, or a bank, to work together on shared challenges, shared opportunities. So the goals of GFANZ, we launched it at President Biden's Earth Day Summit exactly a year ago, are to broaden the participation of financial firms in the race to net zero, to raise ambition amongst financial actors about what it means to, for example, be a green bank, to coordinate our actions in a way that maximizes their positive impact, and to support technical collaboration between financial institutions, but also with civil society, scientists, academics, the official sector. Because if we're going to collectively decarbonize the real economy and decarbonize the financial system, we're going to have to work together with all different parts of the economy and with society and governments. And then finally, to elevate and showcase the positive actions that our members, which are banks and asset owners and asset managers, are taking to really show leadership on climate. So if we go to the next slide. So we launched about a year ago, and we now have a vehicle for every single type of financial institution to join and join GFANZ and work together. The pickup, as you saw in slides two previously, was really impressive. I think we now have over 500 financial institutions who are members from over 45 countries. So it's a truly global effort. And if you aggregate those members' balance sheets, it comes to over 130 trillion of assets, which is around 40% of global financial assets. So it's a really systemic global grouping. But we wanted to go beyond just a campaign, a recruitment campaign, and create a high-functioning organization that works together on really important work that will accelerate an orderly and just transition to a net zero financial system, net zero economy. So, you know, we're chaired by Mark Carney and Mike Bloomberg, but we also have a group of CEOs from every part of the financial system, every part of the world, to work to oversee a body of work that's led by the Secretariat, which Yuki and I are part of, but it's actually the work streams which you're seeing on the screen are overseen by the CEOs that sit on our board. So this is a practitioner-led group. Our work is done by the actual practitioners working together. So people like Peter and his boss Noel Quinn are working alongside. I mean, on Peter's work stream, it's Amanda Blanc, who's the CEO of Aviva, which is a big insurer and asset owner. So almost for the first time, or quite a novel new thing, was different types of financial institutions from different geographies working together to produce these technical outputs that are needed if we are going to succeed in our mission to decarbonize the financial system. So I'm just going to quickly run through the body of work we're doing at the moment, and then hand over to Peter, who is actually leading one of the most important work streams that we're doing, which was published yesterday, and I think it's really relevant to this group. So we have three pillars of work. The first is financial institution net zero transition plans. So in order to be a net zero bank, you commit to net zero, to be net zero by a certain time, and to set science-based targets for 2030. But you will need a strategy, a plan of how you actually achieve those ambitious goals that's more holistic and comprehensive. And what we would like to see is consistency in things like data, approaches across the financial system, so that plans are more understandable and intelligible to various actors and stakeholders across the world, be they official sector, civil society, investors, etc. So yesterday, Peter's been leading this work. Yesterday, we published our consultation, and it is a genuine consultation. So that's on the website. And if you have any views on that, please do feed them in to that consultation. Under that, we also have a lot of technical work streams, which is really important to how financial institutions can transition. So obviously, in aggregate, you can't have a net zero financial system without a net zero real economy. So in our discussions as an organization and as a financial sector with the real economy companies and corporates and clients that we finance, we heard that they want to demonstrate to their investors, bankers, that they are committed to transition and they are committed to net zero. But it wasn't always that clear how we wanted that information disclosed and presented, you know, what metrics, etc. So we produced some guidance on real economy transition plans. And importantly, if we're setting targets as a bank, for example, on our steel portfolio or our aviation portfolio or our oil and gas portfolio, we need to know what a 1.5 degree or a well less than 2 degree pathway is for that sector. So we've produced some guidance on sectoral pathways, because obviously if we're going to achieve net zero, we need finance to flow to where the emissions are, which is slightly counterintuitive to some people, but we actually need our energy sector to decarbonize. We need our aviation sector to decarbonize. We need our steel sector to decarbonize, and that's going to require finance. So we need sectoral pathways for those global and regional industries. So that's our sectoral pathways. And then we have guidance on portfolio alignment measurement. So what tools and metrics, for example, implied temperaturized metrics, can we use to measure on a forward-looking basis our company's alignment to various outcomes, be they transition or temperature. That final box, manage phase out of high emitting assets. As I just touched on, we need frameworks under which financial institutions can continue to invest in high emitting sectors, either to decarbonize them by retrofitting or other means, or if they are likely to become a stranded asset, to retire that in a just and responsible way on an accelerated timeline, and not necessarily divest the asset, because lots of research has shown that divestment can lead to paper decarbonisation, but real world even increases in carbon, because the person who purchased that divested asset doesn't always run it in a responsible way. The second pillar of our work is mobilizing capital, which I won't spend too much time on just now, but if we're going to achieve net zero, we need investments to developing economies and emerging markets to massively increase to support their just transition. So we're working on various initiatives and pieces of work to try and accelerate, leverage, increase flows to emerging markets, including working with governments and multilateral development banks to find new ways of financing NDCs and countries' ambitious climate goals. And then finally, third and finally, net zero public policy is our third pillar. We know that the financial system can be a leader, it can be a catalytic driver of progress and of positive change, but it cannot deliver 1.5 world on its own. We need clearer, more ambitious public policy from around the world, more certain public policy that we can then finance. And if that policy doesn't come to light, I mean, I think a really good example of this in the country I'm currently sat in the UK is the housing stock. So, and the reason I say this is it's particularly relevant for banks, because a bank cannot achieve a net zero balance sheet if it's 90% of its balance sheet is residential real estate without governments acting to retrofit our housing stock. We have a particularly poorly insulated and gas-powered housing stock. So that's going to need collaboration between the financial system, local government, and our national government to ensure that that's possible. So that work stream is there to articulate what policies we need to see as a financial sector in order to achieve our goals, and to provide that connective tissue with the official sector, with standard setters, with regulators, to try and achieve that supportive policy environment for us to be able to be truly green banks. But as I say, that one that you can see in the top left is probably one of our very most important work streams, and I'm really thankful to Peter for leading it at working level, and his boss, Noel Quinn. So I'll hand over to Peter, because I think that's probably the most relevant piece of work we've done for this audience. So thank you for listening to me.
Thank you, Alex. And that's a brilliant, I think, introduction and context. And I'm really pleased that you and Yuki were able to join us today, because I think it helps give more of a background of what HSBC is doing and how we fit into this change that's happening across the financial system, and which Alex described, is really an essential part of net zero transition when thinking about the global economy overall. So a bit of a timeline here of HSBC's climate journey. So this isn't a new initiative, but last year was also quite a busy year, I think, for us. We set our first climate and sustainable finance ambition in November 2017, which included an initial announcement focusing on providing 100 billion of sustainable finance and investments by 2025. As we progressed over time, we realized that net zero in 2020 was becoming really an essential framework. And so in October 2020, we made our commitment to net zero. And part of that commitment included looking at our own operations and supply chain. And we said we would align those greenhouse gas emissions associated with those activities to net zero by 2030. And for our finance emissions, so the emissions associated with our banking activities, that we would align that to net zero by 2050 or sooner. And I'll talk a little bit more about that in the coming slides. We also, to support our implementation for finance emissions, in March, we joined the Partnership for Carbon Accounting Financials, PCAF, which sets out guidance or standard of how do you measure financed emissions, which has been a really essential tool for us as we've done the analysis last year, started the work. We also, as Alex mentioned, in April last year, we're a founding member of the Net Zero Banking Alliance. So this is the alliance under GFANZ specific for the banking sector. We were one of 43 banks at the time to join. I think the membership is now well over 100 member banks globally. So seeing that uptick in growth that Alex was referring to, recognizing the number of institutions that are making commitments to align their business to net zero by 2050. There were a number of other developments throughout last year. The IEA net zero by 2050 scenario, TCFD published a technical supplement on measuring portfolio alignment. The IPCC had a report on an updated report on the physical sciences basis report they publish periodically, which again highlighted some of the particular challenges with climate change. And another initiative, industry initiative that we've been actively part of, the Financial Services Task Force, which is part of a wider initiative, cross-sectoral initiative called Sustainable Markets Initiative, published a guide, a net zero practitioner's guide for banks. And then on back to HSBC in December last year, we published our own thermal coal phase-out policy, committing to phase out financing to thermal coal by 2030 in EU and OECD markets, and by 2040 in the rest of the world. We also at that time published an update on our approach to measuring finance emissions, which preceded then in February the announcement of our first set of baseline emissions calculations and targets for the oil and gas and power utility sectors. And shortly after, in March, we announced a series of next steps, including a commitment to publish our own transition plan in 2023. Next slide, please. So when we talk about financed emissions and measuring our financed emissions, we're really talking about our scope 3 downstream emissions. This diagram on the right, I find, is a really helpful summary of our different emissions as a financial institution. And we've been reporting our own scope 1 and 2 emissions for some time and measuring that and tracking activities. So those activities directly related to our own operations. We also, as I mentioned, included a commitment to net zero for our indirect scope 3 upstream activities, so those related to our supply chain. So that's the left-hand side, which is our own operations and supply chain emissions associated with that. The right-hand side is the finance emissions. And so the work we're doing now and continuing to do to measure and disclose our finance emissions and set targets consistent with net zero decarbonisation pathways is part of our effort to communicate and understand more broadly what is our impact or association with greenhouse gas emissions in the economy in different types of economic activity. And this right-hand side are the emissions associated with the use of our products and services. Next slide, please. So there are a few different building blocks I wanted to highlight when we talk about measuring our finance emissions and setting reduction targets that are consistent with the net zero decarbonization pathway. Our approach is taking a sector by sector view of our financing portfolios. We've looked at to date, or the targets we've set were for oil and gas, power utility sectors specifically. The exercise we've undertaken was measuring first our portfolio and the finance emissions associated with that. And essentially that is taking the emissions of our clients, so the companies that we're financing through our banking activities, and attributing a portion of those companies' greenhouse gas emissions to us as a financier. And that was the first step of establishing where are we today. We also then look at have an indication, it wasn't part of our disclosures, but get a sense of what's the momentum pathway of that portfolio, given things that we know about our clients today. Where are they headed on a net zero transition journey? And then we set a target. We referred to the IEA's net zero by 2050 scenario for these sectors, and we use that as the reference pathway for setting targets. And I have a slide coming up that gives more specific detail on that. And that delta, I guess, the measurement of where we are today, having an indication of where do we need to get to by 2030, that suggests what needs to change in our portfolio. And that change will be realized in part by how successful our clients or the companies that we're financing are in decarbonizing their business, because that carries through the calculation, but also some of the decisions we take as a financial institution about how are we allocating capital, who are we deciding to finance, and really keeping in mind this idea of having an impact in the real economy that's consistent with change to realize net zero in the real economy. Next slide, please. So what we've done, these are the specific diagrams that were included in our finance emissions disclosures for our banking portfolios. We looked at the oil and gas sector. We chose to use an absolute finance emissions metric in setting our target. So on the left-hand side, you can see the black dot is our 2019 baseline. That was the data set that we used in our measurement. And the green line represents the curve that the IEA has published for the net zero 2050 pathway for the oil and gas sector at a global level. And you can see that we've set our target at 2030 to be consistent with the rate of decline set out by the IEA. And that's a minus 34% reduction from our 2019 baseline to 2030. For the power and utility sector, we took a similar yet slightly differentiated approach in terms of we chose to use emissions intensity metric. So the million tons of carbon dioxide equivalent per terawatt hour of electricity produced as the metric we're using in setting our target. You can see on the chart that that dot floats above, at 2019, floats above the IEA curve, which suggests that our portfolio today has a higher emissions intensity than the global average indicated by the IEA in its scenario. And what we've indicated, or the target that we've set, says that by 2030, we want our portfolio to be consistent with the global emissions intensity of the power sector as set out by the IEA. And for us, that suggests a 75% reduction in emissions intensity for our power and utilities portfolio. Next slide, please. As members of the Net Zero Banking Alliance, there's a number of guidance available to us, and part of being a member of Net Zero Banking Alliance is continued engagement with other Net Zero Banking Alliance members in developing or evolving guidance for the approach for setting and disclosing finance emissions targets. We've set the two targets for oil and gas power utilities. As members of Net Zero Banking Alliance, there's 10 sectors indicated that that we're looking to cover. The requirement is within 36 months of becoming a member that you're covering the majority of emissions in your portfolio in these sectors. So we're working currently for 2022 to extend our analysis to include coal mining, aluminum, cement, iron and steel, and transport, which includes automotive, aviation, and shipping. And then next year, we're planning to complete the next three sectors: agriculture, commercial real estate, and residential real estate, so that we have a full complement of the sectors in our financing activity that we've assessed against these decarbonization pathways for each sector and set relevant science-based aligned targets to decarbonize those portfolios. Next slide, please. So the finance emissions work has really been the start of a wider journey for us. So a number of additional activities that we've committed to, which were outlined in our statement that we published in mid-March. One important area is, now that we have for our oil and gas and power utilities portfolios a better indication of which are the counterparties that make up or contribute most significantly or most material to financed emissions in our portfolios, we've made a commitment that we would engage with those clients on their transition plans, and using this as really a basis for further understanding where clients are in their journey, what's their aspiration, and what are the different activities or plans they have to achieve their decarbonization in their business. And as a financial institution, also thinking about where can we help support them on that journey. So this is a really important exercise for us, focusing on those clients that we believe to be most material and have the greatest potential for impact in looking at our financing activities and portfolios. So there's the companies that are related or in scope covered by our thermal coal phase out policy, as well as major oil and gas producers, our current scope of focus for that engagement. We've also indicated that we would be further reviewing our coal policy and providing an update this year, also looking at the policies we have which guide our financing activities for the energy system more broadly, in particular looking at oil and gas companies, and ensuring that our policies or that we have in place related to our financing and business activity are consistent with net zero by 2050 outcomes. And we're also will be publishing a deforestation policy. We currently have a couple policies related to agricultural commodities and forestry as sectors, and we're looking to update that and also look at deforestation as an important area that we need to manage and take into consideration when making financing decisions. And then more broadly is with these targets, policies, and further understanding of our clients' transition plans, how do we embed this understanding, this knowledge, these data points into decision-making processes? So really looking at how do we operationalize this into how we run HSBC as a financial institution. All of this will feed into our commitment to publish our own transition plan, net zero transition plan. And this is where I wanted to then just lead into the guidance, the recommendations that GFANZ has published as a framework for how the different components that financial institutions should be considering when publishing or producing their own transition plan. If we can move on to the next section, please. Next slide, thank you. So the report that was launched yesterday for consultation sets out a framework that consists of 5 different themes, and underpinning that are 10 different components grouped within the different themes as depicted on this slide here. The first part of the guidance and the recommendations that the report sets out is really the foundation. So articulating what are the institution's objectives and priorities. So what are the targets, timelines that they're working toward. And then there's 3 components related to implementing, or the strategy, the approach for implementing those objectives. Looking at products and services that the institution provides, also the embedding in activities and decision-making, one of the key areas I just described for HSBC, and also policies and conditions that we set out for our financing or investment activities. There's also a lot of guidance related to engagement, in particular around client or portfolio companies, recognizing that this guidance, this framework is intended not just for commercial banks, but also asset owners, financial services providers, other types of financial institutions, not just commercial banks. There's engaged guidance and recommendations related to engaging with wider industry, so the financial services industry, as well as government and the public sector, linking back to the point Alex was making earlier of the importance of policy and supportive policy environment to allow for this change and this action to take place. And then there's the number 8, or the fourth theme in the framework is metrics and targets, and really setting out specifically how is the institution going to assess and monitor progress toward net zero objectives. And then finally, the aspect of governance. What are the roles and responsibilities and linked to incentives around remuneration for the institution? How are those aligned to supporting these objectives? And skills and culture. So what skills and culture are needed within the organization to help drive this agenda forward? If we move on to the next slide, please. So I wanted to just take a moment to reflect on when we think about financial sector and supporting the real economy, just highlighting these 4 different approaches outlined on this page. So starting from the top left, really thinking about what financial sector can do to support the development and scaling of climate solutions. So thinking of the new technologies, the new business models that are going to be core parts of the real economy in the future. How do we get those to evolve and grow? The second, if we move to the top right, is thinking about companies today and the transition of real economy firms in their business, from their business today toward a 1.5 degree aligned scenario for their sector, and helping that transition to occur. So orienting finance to support that transition. Moving to the bottom left, supporting those companies that are already aligned to 1.5 degrees. So we can think of these as sometimes called green companies, or companies that have emerged, set up their businesses to be consistent with net zero. And then finally on the bottom right, and Alex mentioned this in his opening, one of the areas of work for GFANZ is financing or enabling the accelerated managed phase out or early retirement of high emitting physical assets. So those are 4 different approaches or considerations when thinking about what are the activities that financial sector can take to support real economy net zero transition. With that, I'll hand off back to Alex and Yuki to talk more a little about the reports that have been published and the runway, and I guess time for Yuki to talk more about the Apac network.
Thanks, Peter. I'll just run through this very quickly. We were formed under the COP presidency. I'm sure you all know that the Conference of Parties, the COP, is every government in the world under the UN who have an annual meeting on climate. And it just so happens that COPs bookend the calendar year, and they roughly coincide with the G20 summit as well. So it's a nice milestone for us to focus on for our body of work. So we're not completely tied to COP, but it's just a nice bookend for us to aim for our work. So I'll just give you a quick run through of our runway to the end of the year and our work program. Yesterday, we published a bunch of the technical work we're working on, including the one Peter just spoke through. We are in July around some of the G20 meetings, hoping to put out our view on that mobilizing capital to emerging markets and developing economies piece, where we think one piece of the puzzle is what some governments are calling just energy transition partnerships, but we want those to be enduring architectures that better mobilize and access concessional finance for host countries like Indonesia or Vietnam, for example, to implement their energy transition in a just way to their communities and citizens who need access to affordable energy and often are heavily reliant in both from energy and jobs in certain sectors. So we're going to be putting out a statement on that from a technical perspective in July. We're going to be putting out a consultation on portfolio alignment tools in August. And then the sector briefs, which will be about guidance for FIs on how to use sectoral pathways for steel, aviation, and oil and gas, will come out in September. And then our final reports, as I mentioned, this is a consultation that's been published yesterday, will be delivered around October. And then that will be paired with a summary report and a commitment from us on mobilizing capital, trying to map what capital flows are actually happening from our members and the global financial system in general to emerging markets, to developing economies. And then finally, around COP, we'll publish a summary of all of that work at the end of the year. But this, as I said, this is all practitioner-led. Some of this is consultation. So if you're interested in any or all of that work, please do get in touch. I just wanted to mention that last week we launched our Asia Pacific network, which Yuki is the director of. We are really pleased with the representation we have in GFANZ. You know, as I mentioned, over 45 countries represented, but we need more members in Asia Pacific. There's no scenario in which the world achieves 1.5 where the Asia Pacific region isn't central to the solution and the leadership we need. You know, by the end of the decade, you'll have the majority of the global population, the majority of global emissions in this region. And I think the majority of the solutions and leadership we need to see as well. So we want to bring GFANZ to the region so that these outputs that are on screen are well translated and are available for sessions like this and more to understand and support the transition of the financial institutions in the region. But we also want to bring the region to GFANZ such that your insights, your context, your expertise are actually part of the global outputs and inputs into the global outputs that we work on. So we were really delighted to launch this network, and I'll hand over to Yuki, the director, to talk a bit more about it. Thank you.
Yeah, thank you, Alex, and thank you, Peter, for the presentations. Just from my side, so as Alex mentioned, the purpose of the GFANZ Asia Pacific Network is to bring GFANZ to Asia Pacific, and the other way around as well, that we want to bring your expertise and perspectives to GFANZ. So this is the GFANZ Global Work Program, and we would love to support you in either directly being involved in these different activities at the global working group level, and also to mobilize your actions and implementation on the ground in Asia as well. And one of the things that I guess the key thing here is that that we really want all financial institutions in globally and in Asia Pacific to set credible climate targets and transition plans. So that is our ultimate aim. And for that, we definitely would like to do a lot of outreach to those institutions that have not yet set climate targets and transition plans, and also to help those institutions that have set climate targets and have set transition plans to actually implement it as well. Because it's one thing for institutions to set targets, but it's also but the next challenge is actually the implementation, and that's also not an easy one to do by one institution alone. And as Peter was explaining, it is very much about engaging with clients, but also a lot of help can be sought from discussing with peers and also with policymakers and regulators and other stakeholders as well. So we'd like to be supporting that process. And as Alex was mentioning, in Asia Pacific, we have members of GFANZ that are also members of the Net Zero sectoral alliances, like Net Zero Banking Alliance, but they are concentrated in a few countries at the moment. So namely Australia, New Zealand, Japan, South Korea, Singapore, Bangladesh, Malaysia. And we'd love to see much more diversity of the representation from Asia Pacific. So that outreach is definitely one of our key priorities. And in that, kind of related to that, we are very interested in discussing with the Asia Pacific financial institutions and other stakeholders about the global versus the regional and country plans. So in here, you can see that these outputs that are coming from GFANZ is a global output. And I think a lot of it would be applicable directly to your institutions in Hong Kong or in Asia. But for some things, certain parts of it, it may be difficult for you to directly utilize it. So there, we would love to have a discussion on which part of the block you would find useful if we discussed on, say, for example, in Asia Pacific sectoral pathway for a certain industry, or even for some parts of the transition plan, maybe reflecting the context of a national policy and targets as well. So balancing between what is global, what is regional, and what could be country specific. Of course, our default would be to keep the global as much as we can, and but we acknowledge that maybe some of the pieces here need to be regional and national. So just wanted to, from the Asia Pacific Network was just launched last week, as mentioned earlier by Alex, and we haven't set any concrete plans on what kind of working groups or what kind of activities we will be doing. But the first initial feedback that we received was very interesting. So I just want to share with you the types of interests that we have heard, and for you to let us know, if you agree with them, or if you think that other things are a priority in Hong Kong, for example. So just sharing with you some of these perspectives. So for example, the need for more enabling policy and regulatory environment, the need for more GFANZ presence in the region, especially in emerging markets, the need for FI transition plan and sectoral pathways that are adjusted for the regional and country context, more credible guidance and standards on transition financing, more blended financing, and more dialogue with MDBs and other development agencies, development banks, carbon credits, addressing avoided emissions as well, such as early retirement of carbon intensive technologies, as well as avoided deforestation. And then a lot of opinions around the need for data. So data, and more data. So those were some of the priorities that we've heard during the launch events in Singapore. And we'll be very interested to learn of your priorities, the challenges that you are facing in Hong Kong as well, and to help us shape the Asia Pacific GFANZ program. Thank you. I hand it over to Peter or Nadia.
Yeah,
I think Nadia is going to lead us through some questions, but thank you, Yuki. And it's great to hear more about the APAC network for GFANZ.
Yeah, thanks a lot to all of our speakers. And we have quite a few questions coming in. So I think we will take a few of them as long as we have time. So the first question we received from Daniel, and perhaps this is suitable for Peter, is what could be done by HSBC if their clients do not meet the financed emission targets?
A great question. Thank you, Daniel. I guess one thing to make clear is that we've set the reduction targets at a portfolio level. So we're not saying that every client, if I refer to our oil and gas target, so the minus 34% reduction target that we set is for our portfolio overall. We're not expecting that every client is going to be reducing at the same rate. And I think this is part of our approach by design, is recognizing that every client will be at a different starting point. It'd be a different place on their journey, and why the focus we have now on engaging clients on their transition plan is really to understand that context. Where are they coming from? Where are they aspiring to get to? And what do they need to do to get there? How can we support? So that approach is inherent to how we're thinking about changing our portfolio over time to be consistent with net zero. We know that there will be, so first, I guess, through the engagement we have, we trust that most of our clients appreciate the net zero challenge and are committing their organization to change. So I think that's really important to acknowledge that there is a lot of buy-in, and this links back again to one of the slides Alex presented early on, just the commitment to net zero. I think the challenge is still many companies are facing, including our own to some degree, is what do we need to do specifically to drive that change? And that's where we want to work with clients to do that. If we find that they're not demonstrating that commitment to action and change, I think that does raise questions for us of, are they the right partners for us as an institution? Are we, if we're not, don't feel like we have the opportunity to really support them in this transition in a way that's consistent with our ambition, that would be something we'd have to consider further as a financial partner.
Thank you, Peter. Thank you very much. And I think we have time for just one more question and a very brief response. So how are banks approaching new economy sectors and opportunities? And is there any guidance from GFANZ on how the energy sector in Asia is expected to evolve and the role of banks to support that? So perhaps, Peter, you could kick off, and then your co-panelists could supplement.
Yeah, new economy sectors, I guess there's one thing that we've done for HSBC is last year, or in 2020, we did announce what we call the Climate Debt Fund, but also looking at what other products and services or initiatives we can start to support new companies and kind of climate tech, clean tech kind of companies to help them grow. So orienting resources or developing specific propositions to support that activity. I think, Yuki, you made a reference to blended finance, and I think that's another area of looking for partnerships and collaboration to support some of this growth. We've participated in an initiative called the Breakthrough Energy Catalyst Program, for example, which is looking at new technologies and how to help them scale. And I think there are a number of other examples that could be cited trying to focus on this. But I don't know if the GFANS colleagues have anything they'd like to add to that.
Well, last year we commissioned Vivid/McKinsey to do a kind of mapping of actual investment roadmaps on a sectoral and geographic level, and that's hosted on our website. It doesn't probably go to the granularity that bankers would really like to see, and I think but it is on the website and it is very interesting research. I think one of the exciting things about the Asia Pacific network, and eventually we'll do Africa and LATAM one, but is that it can start listening to members, listening to the wider stakeholder, what's actually the most useful outputs, research outputs that we could do that would support you and your transition and support our members in identifying those opportunities and financing new innovation in energy sectors or whatever else. So we also published the BNEF, Bloomberg New Energy. They published a bunch of work that we asked them to do on the different scenarios and what they mean just earlier this year. So we have, as GFANS, commissioned a couple bits of work that's relevant to this area, but I think we should do more. And I'm excited that the APAC network can do that specifically for the APAC context.
Just to quickly add that Asia Pacific is positioned really well in the new economy sectors. So there is a lot of opportunity, and I think most of the technology that is required for going net zero beyond 2030 has not really been commercialized yet, meaning that there's tons of financing required, and banks probably need to go into financing them a little bit earlier than what they would have traditionally been more comfortable with. So that kind of, adjustment of risk appetite needs to be had during the next 10 years. Thank you.
Thank you very much, Yuki, Peter, and Alex, for a very engaging session and for your candid answers to those questions as well. So we just have a couple of minutes left, so perhaps we could go around for some of the closing remarks, maybe starting with Alex.
In my closing remarks, I'll try and take a question we've had in the chat box as well, which was about the resources required to do this and the size of institutions that have teams available to do this. And what I would say that I found really remarkable in the time I've been working at GFANS and the Net Zero Banking Alliance, which Peter is a member of, but also the broader bits of UNEP-FI who run that alliance, so the PRB, etc., is the level of collaboration across institutions on this, and the diversity of institutions. So the Net Zero Banking Alliance and GFANS, for banks, they're one and the same, has members like HSBC, which have 200,000 employees, but it also has tiny banks from the Caribbean, the UK, Kenya, which have dozens of employees rather than hundreds of thousands, and they're part of a very supportive community. And whether you're a small bank or HSBC, this is a business-wide activity. It's not your ESG department doing this. It's not your climate lead doing this. This is your whole institution doing this, because it requires a whole economy transition, requires a whole bank institution transition. And those resources and tools that GFANS puts out there and the Net Zero Banking Alliance puts out there should help in having off-the-shelf materials that are written in language that is most useful for bankers and practitioners to implement. So I would say in response to that question and my closing remarks that I think the best way for institutions of all sizes to seize these opportunities and start transforming their organization and their economy is to join groups like this, actually, the Green Alliance for Green Commercial Banks, the Net Zero Banking Alliance, and start working with your peers and supportive secretariats and scientists and academics like us to help you. And I would just say no one knows all the answers. Right, so HSBC is doing great work, but they don't know all the answers. We as GFANs don't know all the answers. So just because you feel like it's really difficult, that's because it is difficult and it's new. So don't let that put you off. Thank you for having me today. It's been a real honor to speak to all of you.
Thanks, Alex. And Yuki, anything from you before we close?
No, mindful of time. No, nothing. Really excited to work with the community that joined today. So looking forward to working with you. Thank you.
Thank you. And Peter?
Thank you, Nadia. I really, borrowing from some of the comments that Alex has just made, I think it is a journey, and why I always refer to that timeline slide I included in my presentation, because even though it's been 5 years since we've made our first climate announcements, and yet it feels like there's still so much work for us to do. And so even though we are a large organization that does have resources supporting this, the process of just a commitment to, it's a journey, and getting started, collaboration both internally and externally has been a really rewarding part of my experience working on this agenda. So learning a lot, thinking about how to solve problems together. And I think that the challenges we're facing are challenges shared by many institutions, and why I think the GFANS network and these other activities networks like the Alliance for Green Commercial Banks are so essential, because this does require economy-wide transition, and the financial industry is at the heart of how capital moves, and for us to consider net zero climate impacts and other impacts in how we allocate that capital and engage with stakeholders, I think is really essential.
Thank you very much, Peter. Thanks our panelists for your time today, and thanks very much to our audience who stayed with us for the past hour. I hope this information has been useful for everyone, and we hope to see you next time.